Greed makes you give back your profits to the market. In the first 10 seconds, here's the solution you've been missing. You don't lose winning trades because the market turns against you. You lose them because greed quietly takes control after you're already right. If you can learn to recognize that moment and shut it down, you stop donating profits and start keeping them. You know this feeling. You enter a trade cleanly. Your analysis is solid. Price moves in your direction. You feel calm at first. Then the numbers start growing. That's when the conversation in your head changes. This is working. I should let it run. Why settle for small when it could be big? That's the exact point where greed begins its work, and it never feels dangerous. It feels logical. The first way greed turns winning trades into losses is by convincing you to ignore your original exit plan. You had a target for a reason. It was based on structure, probability, and logic. But once you see profit, greed reframes discipline as limitation. You start thinking your target is too conservative. You tell yourself you'll manage it manually. In reality, you've just removed structure from the trade. Now you're reacting instead of executing. When price hesitates, you hesitate. When it pulls back, you hope. And hope is not a trading tool. You overcome this by locking your exits before you enter and treating them as non-negotiable. You decide your take profit when you're calm, not when money is flashing on the screen. If you want runners, you plan them in advance. You don't invent them mid-trade. Discipline before entry is how you silence greed during the trade. If this already sounds like your experience, pause for a second, like the video, subscribe to the channel, share this with someone who keeps watching green trades turn red. This is how accounts stop bleeding quietly. The second way greed destroys winning trades is by making you believe the market owes you more. After price moves in your favor, you feel validated. You think, I was right. That thought is dangerous. It shifts your mindset from probability to entitlement. You stop taking what the market offers and start demanding more. When price stalls or reaches a logical reaction zone, you don't take profit because you're emotionally invested in being right, not in managing risk. You overcome this by reminding yourself that every trade is just one event in a long series. Being right on direction doesn't mean you're entitled to maximum profit. Professionals take high probability money and move on. You don't need to extract every pip to be successful. You need to consistently extract reasonable profits without emotional attachment. The third way greed turns winners into losers is by making you delay decisions. When you see profit, greed tells you to wait just a little longer. Not yet. One more push. It hasn't peaked. This delay feels harmless, but it shifts you into a reactive state. Instead of acting decisively, you start negotiating with price. By the time you finally decide to exit, the opportunity is gone. You overcome this by acting at predefined moments, not emotional ones. You decide in advance where you scale out, where you exit fully, and where the trade is invalidated. When those moments arrive, you act immediately. No second guessing. Speed in execution is how you beat greed's hesitation. Drop a comment if this delay habit has cost you money. Awareness is the first step to control. The fourth way greed destroys winning trades is by making you believe the market turned into imaginary money you've already spent. Once you see a floating gain, your brain starts treating it as yours. You think about what it could become instead of what it currently is. When price pulls back, it feels like something is being taken from you. That emotional attachment causes you to freeze, hold too long, or refuse to exit at break-even, even when conditions change. You overcome this by mentally separating open profit from realized profit. Until you close the trade, that money does not belong to you. It is market-controlled, not account-controlled. When you truly accept that, pullbacks don't feel like theft. They feel like information. And information leads to better decisions. The fifth and final way greed turns winners into losers is by influencing the next trade. This is the part most traders miss. When greed makes you hold too long or miss an exit, it doesn't just damage that trade, it damages your mindset. You chase the next setup. You overtrade to make back what you think you lost. Now greed has multiplied its impact. You overcome this by resetting after every trade, win or loss. You treat each trade as independent. You review execution, not outcome. You step away if emotions are elevated. Greed feeds on momentum. You starve it by slowing down. If this video is hitting close to home, like it, subscribe, and share it with someone who needs to hear it before their next winning trade slips away. Greed will always show up. The difference now is that you'll recognize it, contain it, and move on. And when you do, winning trades stop turning into losses, and profits finally stay where they belong, inside your account.